Welcome to your CryptoCast Daily. All the key news, none of the noise. Like and subscribe to stay informed. Here are the top highlights shaping the crypto market today. Fed rate decision, MKR-SKY conversion deadline, crypto week ahead. Bank of England's proposed stablecoin ownership limits are unworkable, say crypto groups. What's next for Bitcoin and Ether as downside fears ease ahead of Fed rate cut? Asia morning briefing. Native Markets wins right to issue USDH after Validator vote. BitMEX co-founder Arthur Hayes sees money printing extending crypto cycle well into 2026. Bitcoin bulls bet on Fed rate cuts to drive bond yields lower, but there's a catch. Are the record flows for traditional and crypto ETFs reducing the power of the Fed? Corporate Bitcoin buying slowed in August as Treasuries add $5 billion. AI, mining news, GPU gold rush. Why Bitcoin miners are powering AI's expansion. Bitcoin climbs as economy cracks. Is it bullish or bearish? Fed's Sept. 17 rate cut could spark short-term jitters but supercharge Bitcoin, gold and stocks long-term. Your company probably doesn't need its own L2. Meme coins rally as traders bet on Fed rate cut and US altcoin ETFs. Ton strategy starts share buyback, Treasury staking after shares plunge 40%. State of crypto. Brian Quintens vs. Tyler Winklevoss. WisdomTree launches tokenized private credit fund. Gemini Crypto Exchange IPO pops 14% as Winklevoss twins predict $1 million Bitcoin. Bone price surges 40% after Shibarium flash loan exploit. Crypto's time has come, SEC chair outlines vision for on-chain markets and agentic finance. Bitcoin ecosystem surges with subnet expansion, institutional access. Stay tuned as we break down the details behind these headlines. Cryptocurrency groups are pushing back against the Bank of England's proposed limits on stablecoin ownership.
The Financial Times reports that these groups believe the rules would give the United Kingdom stricter oversight than the United States or the European Union.
The Bank of England is considering limiting individuals to holding between 10,000 and 20,000 British pounds worth of systemic stablecoins.
Businesses could be limited to around 10 million British pounds.
These systemic stablecoins are defined as tokens already used for payments in the United Kingdom or expected to be in the future.
The central bank says these restrictions are necessary to prevent bank deposit outflows and protect financial stability.
However, industry executives argue that the plan is unworkable.
They point out that no other major jurisdiction has implemented similar limits.
Bitcoin and Ether downside fears have eased, according to options market data.
The next price move depends on the Federal Reserve rate cut scheduled for September 17.
Bitcoin 7-day call put skew has recovered to near zero from negative 4% a week ago.
30 and 60-day skews have also rebounded, signaling easing downside fears.
Ether options skew shows a similar pattern.
Bitcoin and Ether prices have risen ahead of the Federal Reserve decision.
Traders expect a 25 basis point rate cut to 4% to 4.25%.
A 50 basis point cut could significantly boost Bitcoin, Ether, and Solana.
Native Markets has won the right to issue the USDH stablecoin on the Hyperliquid network.
This follows a vote by Hyperliquid validators, concluding a week-long contest with proposals from several companies including Paxos and Frax.
Native Markets secured approximately 70% of the validator votes.
Paxos received 20%, and Athena garnered 3.2%.
The rollout of USDH will occur in stages, beginning with limited mints and redemptions.
A USDH and USDC trading pair will be introduced before the limits are removed.
USDH aims to compete with Circle's USDC, which currently holds a significant portion of Hyperliquid deposits.
Other stablecoins will remain supported on Hyperliquid if they meet certain requirements.
Arthur Hayes believes the current crypto bull market will continue, fueled by early-stage global monetary trends.
He argues that governments are not finished with aggressive monetary expansion.
Hayes points to United States politics, saying President Donald Trump's second term has not unleashed potential spending programs.
He suggests investors underestimate the liquidity that could flow into equities and crypto.
Hayes ties his outlook to geopolitical shifts, including the erosion of a unipolar world order.
Such instability pushes policymakers toward fiscal stimulus and central bank easing.
He raised the possibility of strains within Europe as another factor accelerating global printing presses.
Hayes pushed back on concerns that Bitcoin has stalled after reaching a record $124,000.
The Federal Reserve is expected to cut interest rates by 25 basis points to a range of 4.00% to 4.25% on September 17. Bitcoin bulls believe this easing will lower Treasury yields and encourage risk-taking. While rate cuts could impact short-term Treasury yields, long-term yields may stay high due to fiscal concerns and persistent inflation. This increased debt supply could put upward pressure on yields. The steepening yield curve, reflected in the widening spread between 10- and 2-year yields, signals these concerns. While the labor market has weakened, inflation has increased to 2.9%, its highest since January. Market anticipation of rate cuts has already put pressure on yields, with the 10-year yield falling to 4%. A similar pattern occurred in 2024 when yields initially fell but then rebounded due to economic resilience, inflation, and fiscal concerns. Record exchange-traded fund flows may be reshaping markets.
United States-listed exchange-traded funds now hold over $12 trillion in assets.
This year-to-date inflows have reached a record $799 billion.
The top 3 providers control nearly 3/4 of the United States exchange-traded fund market.
Crypto-linked exchange-traded funds manage over $120 billion combined.
Bitcoin exchange-traded funds alone hold over $100 billion.
Ether exchange-traded funds add another $20 billion.
Much of the cash comes from retirement accounts.
Bitcoin miners are shifting from cryptocurrency to artificial intelligence data centers.
This move is driven by the promise of stable income and the challenging economics of crypto mining.
Companies like Core Scientific, Hut 8, and TerraWolf are trading their Bitcoin mining equipment for graphics processing units.
These units are essential for the rapidly growing field of artificial intelligence.
Bitcoin mining is energy-intensive, and energy costs are a major factor.
While miners profited during the 2021 crypto boom, the subsequent market downturn and halving event reduced profitability.
The need for substantial power, once a burden, has become an advantage for miners seeking to diversify.
Their existing infrastructure and expertise in managing high power systems are attractive to artificial intelligence companies.
Bitcoin is about 4% higher than it was a week ago.
This is good news for the digital asset but bad news for the economy.
Negative economic data raised expectations that the Federal Reserve will cut interest rates.
This makes riskier assets like Bitcoin more attractive.
United States Consumer Price Index figures showed inflation might be stickier than anticipated.
Revised job data revealed the United States created almost 1 million fewer jobs than initially reported.
The United States added only 22,000 jobs in August, with unemployment rising.
Initial jobless claims also increased to their highest level since October 2021.
Markets expect a quarter-point rate cut from the Federal Reserve on September 17.
This could trigger short-term volatility but potentially fuel longer-term gains across risk assets.
Consumer prices rose 0.4% in August, lifting the annual rate to 2.9%.
Producer prices remained 2.6% higher than a year earlier.
Non-farm payrolls increased by just 22,000 in August.
Average hourly earnings still rose 3.7% year over year.
Futures traders see a 93% chance of a 25 basis point cut.
If the Federal Reserve limits its move to just 25 basis points, investors may react with a buy the rumor, sell the news response.
Many companies are considering launching their own Ethereum Layer 2 network.
Several are centralized and linked to a single enterprise.
Launching a Layer 2 network is appealing compared to a Layer 1 blockchain.
Layer 2 networks benefit from Ethereum integration.
Ethereum hosts digital assets, real-world assets, stablecoins, and decentralized finance applications.
A Layer 2 network offers control within its ecosystem while maintaining Ethereum integration.
They also control network access and data visibility.
These costs are likely lower than starting a new network.
Meme coins are rallying as altcoin season discussions increase.
This is partly due to expectations of a Federal Reserve interest rate cut, which could benefit risk assets.
Bitcoin has underperformed compared to altcoins recently.
Altcoin season indexes, which track top cryptocurrencies against Bitcoin, now indicate alt-season territory.
Over the last 24 hours, Bitcoin rose only 0.3%.
Meanwhile, the CoinDesk Meme Coin Index rose 7.1%.
Tokens like SHIB and BONE, components of the CoinDesk Meme Coin Index, have seen recent price surges.
Growing risk appetite, fueled by potential interest rate cuts, is driving capital into altcoins.
Ton Strategy Company has repurchased over 250,000 shares at $8.32 per share.
This is well below its stated treasury asset value of $12.18.
This buyback is part of their $250 million program.
It follows their shift to position Toncoin as their primary treasury asset.
The company has also begun staking its Toncoin holdings.
This will earn rewards by helping secure the blockchain network.
Staking rewards data shows that yield could be as high as 4.8%.
The company owns 217.5 million Toncoin tokens, currently trading at $3.24 each.
Former Commodity Futures Trading Commission Commissioner Brian Quintenz shared messages with Gemini co-founder Tyler Winklevoss.
This unusual move from a former public official awaiting Senate confirmation for the CFTC chair position raised eyebrows.
Quintenz shared these messages at CoinDesk's Policy and Regulation event.
He stated that he believed President Donald Trump might have been misled.
Quintenz explained he was reluctant to release private messages.
However, he felt it necessary to clarify what Winklevoss asked of him, and what he refused to promise.
The messages pertain to Gemini's complaint with the Commodity Futures Trading Commission Inspector General.
Winklevoss had lobbied the White House to pause Quintenz's confirmation.
WisdomTree has launched a new tokenized fund focused on private credit.
This fund is called the WisdomTree Private Credit and Alternative Income Digital Fund.
It tracks a basket of publicly traded closed-end funds, business development companies, and real estate investment trusts.
The minimum investment is only $25 and offers 2-day redemption.
WisdomTree also launched an ETF tracking the same benchmark in 2021.
Private credit lending has grown recently as investors seek yield-focused options.
WisdomTree head of digital assets Will Peck said it is about bringing the asset class to more investors.
The firm has launched several tokenized investment vehicles for money market funds, fixed income securities, and equities.
Shibarium, Shiba Inu's Layer 2 network, was exploited using a flash loan.
The attacker obtained 4.6 million BONE, the governance token.
This allowed them to gain control of Validator signing keys.
The attacker then signed a fraudulent network state.
Assets were siphoned from the Shibarium bridge to the Ethereum network.
The staked BONE is subject to an unstaking delay and remains locked.
Developers are working to freeze the funds.
Shibarium paused staking, secured remaining funds, and launched an investigation.
United States Securities and Exchange Commission Chair Paul Atkins stated that cryptocurrency's time has come.
He pledged to modernize the United States Securities Rulebook.
He also wants to expand Project Crypto to bring markets on-chain.
Atkins said the Securities and Exchange Commission is shifting away from enforcement-driven policymaking.
The Securities and Exchange Commission will provide clear rules for tokens, custody, and trading platforms.
Atkins said most tokens are not securities.
He promised clear rules for determining when crypto assets fall under Securities and Exchange Commission oversight.
He said entrepreneurs must be able to raise capital on-chain without endless legal uncertainty.
BitMEX is experiencing rapid growth in subnets, wallets, and institutional access.
77% of consumers now say decentralized artificial intelligence is more beneficial than systems controlled by large technology companies.
Nearly half of respondents already use open-source artificial intelligence tools.
BitMEX is a decentralized blockchain-based network creating a peer-to-peer marketplace for machine learning.
BitMEX's infrastructure is expanding rapidly with 128 subnets live.
These subnets cover use cases from fraud detection to on-device artificial intelligence.
Custody providers including BitGo, Copper, and Crypto.com have joined, demonstrating institutional interest.
The network recorded 50% subnet growth, 16% miner growth, and a 28% increase in non-zero wallets in the second quarter.
That's a wrap on this episode of CryptoCast Daily. Thanks for tuning in. We'll catch you next time with more market updates, bold predictions, and fearless crypto insights.